The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to another edition of the Power Trading Hour with me, your humble and lovable host, David White, for another wonderful adventure in equities, especially in technology equities. Always looking in that sector. Had kind of actually a strange day today. Almost makes me want to go out and buy a lottery ticket. When you normally don't see it. I'm trying to think of the last time, maybe someone can say, when's the last time you saw somebody riding a unicycle? I actually saw somebody riding a unicycle, and at the time, I'm going to assume this was a kid riding a unicycle to school. I haven't seen a unicycle, much less a kid riding a unicycle. Now, I suspect that he's headed for Barnum and Bailey's clown circus if he's going to do that, but I kind of vaguely remember that it was kind of a hippie kind of thing back in the 70s to ride a unicycle around, do some other things. But I don't know, kind of strange and weird to see that. I probably haven't seen a human outside of a circus or TV on a unicycle, I got to say, in 30 or 40 years. It is rare, but I guess everybody wants to do that. Of course, this day in 1412, the daughter of the tenant farmer, Duchess of the Bar and Lorraine, otherwise known as Joan of Arc, she kind of met her demise out there. I never really spent a lot of time on it. I always knew about Joan of Arc, but maybe I'll get to read about it a little bit later today. But 1412. Just seems like yesterday, doesn't it? I'd make some coarse jokes and say too soon, but 1412, I think you could probably make all the jokes you want. So what do we have in the market today? We are up, not surprisingly, into fund buying. They've pushed this market up. Almost 12 S&P points, 1660 on the S&P cash, 2.3 billion shares, so a little lighter than yesterday. But it really kind of surprising that that they could turn this market around. When we saw Japan open up down 3% last night, very interesting to see them really spin it after and before our markets opened up this morning. They got the rinse and wash cycle really going, and suddenly everybody's investing their money and their retirement money in the stock market of Japan, and therefore it should go back up. Tell you what it tells me is there's a massive amount of desperation, especially in Japan right now. I actually wrote about it this morning. Back in about 1712, trying to think. I think that's about right. 1712. There was a gentleman named John Law. He was an Englishman. He went to France. He conned them all into putting all their money in certificate notes, kind of the beginning of paper money. It was always metal before then, but this was the first paper money to come along at about I think it's 1705 or something. Anyway, he got the biggest Ponzi scheme going on new land in the Louisiana Territory, got everybody to put their money and their houses behind it all, and made probably the biggest bubble in America. Of course, before the United States was formed. But 1712 doesn't seem like that long ago either. But certainly the first thing I thought of when I saw this plan from Japan was the amount of flack that Bush 43 got when he wanted to put money in the equities. I have yet to hear any of those same kind of echoes today, which kind of scares me. wasn't a good idea then. It isn't a good idea in Japan. My guess this was warmed over to make sure that this market was held up at least through fund buying out here. We could be going higher or we could be going lower. But one thing that they were not going to do was allow these funds to get off on a free ride. The last 3 days of the month and the first 2 days of the month, funds are required to be 100% invested. Just for those new listeners, there are fund managers and there are money managers. Money managers buy funds. Fund managers control those funds. If you're a money manager, you want to buy 100% fund of technology, then you buy that fund. If you want to hedge it, your hedging is where you get paid for, and what you get paid for as a money manager. So if you're CalPERS out there in California, you're the biggest retirement fund. They'll go out and buy these funds full of technology, baskets of technology stocks. They're expecting to be 100% invested, and by that, they know how much to hedge on the other side, whether they should be buying puts and calls, whether or not they should be buying index positions. All of that is dependent on a fund being 100% invested all of the time, and by their charter, the last 3 days and first 2 days of the month, 85% of funds must be 100% invested. So what does the street do? It marks everything up on the last couple of days. And, of course, anybody that's in those funds pretty much getting the raw deal because, of course, if they had that money on the 15th, they could have bought it. And some funds do. The better run funds do. But let's say that you get toward the end of the month and you don't find anything you like, you still have to buy something. You still have to be 100% invested. That is the organic reason I suspect we're seeing a lot of PR stunts going on today. Again, we're going to get into some of these others PR stunts going on, and probably one that is just a work of beauty. We'll talk about that in a few minutes also. But I wanted to get to some of the stocks that were moving. A couple of the firms out there were touting solar stocks today. Some of these solar stock companies are still highly short. They're absolutely nowhere close to being worth the share price that they have today. Maybe one day. And, of course, that's always the age-old argument, will these stocks grow into it? But first of all, none of these companies make money. None of them. Not a one of them. No matter what they say, they are not making money. What they are doing is getting government subsidies. When we look at Tesla, they would have made no money without government subsidies. If they followed the law for car dealers, they would make no money. They would be a loser. So would be First Solar. FSLR is one of the big ones popping out here today. Not a lot of volume, but this is exactly where we need to start looking at if you want to start looking for a double repo patterns. And we're very close. I can just eyeball it here and see. But let's see. Let's go back with a displaced moving average. And turn those on. But if you get about 10 to 15 days of higher than the 3x3 displaced moving average or a 9-day moving average, I'll actually change this back to a traditional moving average here. And we'll just change that to 0. And we'll change that to 9. So we can make it nice and plain. You'll see what I'm looking at. Let me zoom back in here. I'm almost, I kind of like that Basel 9-day. But anyway, in either displaced or not, you want to look for 10 to 15 days above a 9-day moving average if you don't have displaced moving averages. A few days with a close below that, and then a pop back above it. And then the next close below it is when you want to pull the trigger. And we have a ton of stocks in the market that if we did close back below this a 9-day moving average would make a double repos all over the marketplace. So we're still waiting for confirmation. And I suspect a kind of a flat day tomorrow and probably 1655 for the close. I think they're just going to try to hold it up here. This volume is not really picking up. Been kind of low today. Maybe the close will change my mind, but at the moment, all I'm looking for is this market to whipsaw back and forth. I suspect that the market is doing that for one reason, and that is to try to get in and out of as many stocks before the market rolls over. When we have such desperation as a last Hail Mary pass that we're going to put all the retirement money in the Japanese stock market to save it after being off 3% last night, just makes me very nervous that they are getting into a desperation mode, especially in Asia. What else do we have out here moving the market and in play? Of course, gold and everything. Painted gold up $21.60 today. And what does that give us? A deliberate attack on the U.S. dollar last night, and I suspect we're going to continue to see that from Bernanke and his minions across the globe in the finance. They want to try to keep this thing down under $84. I don't think that they will be able to. They'll be able to back it off a few times, but eventually this thing's going to take off, and when it does, it's there's going to be no stopping it whatsoever. But certainly there was a lot of collusion last night in making sure this went back down. There was no organic reason for it to drop like it did. In fact, what is it right now? It's off 60 cents back to 80, just over 83.08 on the dollar index. But we'll see how this thing plays out today. Other thing, I wanted to get back to other ones. Facebook up 5%. It was upgraded. Of course, nothing is changed in Facebook except it is a time to push this thing back out to what will eventually be bag holders. This did go below the last major low. It's gone below it on higher volume, and fun buying out here. A nice little pop down to $23.26 yesterday, and a nice little pop up. Again, fairly highly short, so it's going to take forever for this thing to break, much like a lot of the other stocks out here that have super high short interest rates. Not interest. Short interest, I guess is right. But we've got some other ones that are moving out here. Vago was up 10%. One of the few bright spots in the Apple at least supply chain. Let's take a look at them real quick. Up very strongly, and decent volume out here also. AVGO on that. We were looking for 6.7 million shares. Already going through that today with 6.5. So I think you're going to get a legitimate breakout here. We'll be back and talk at a few more of these that are truly moving. Got a little farther to go on Avago, though.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As we come back from the break, up just 11.5 points on the S&P cash, still under 2.4 billion shares. So kind of an interesting market, but kind of quiet. Going to be a lot more interesting how the end of the day comes in. Of course, we're fairly close to the high of the day, just a point under it right now. But I suspect, I would not be surprised to see this thing close out up about 5 points today. By the end of the day, I think there are some funds out here that certainly look like there are redemptions instead of buying. Mostly in the housing sector, a lot of money that could come out of those fairly quickly, and I'm not exactly sure, how much money they're going to need to get out of that. But not a great, huge move out here at the moment. But it's probably the thing I'm looking forward to the most right now. If you listened to last Friday's show, was the time when the market switch circuit breakers were going to be active the first 15 and last 30 minutes of the day. That will happen in August. And at that point, I suspect we're going to have a market that is less able to be pushed around. Right now, I kind of see a lot of action in the first 15 minutes that's aimed at always pushing these stocks up and then slowly pushing them out all day long. Again, the last 15 minutes with no circuit breakers, just easy for mischief makers out there. Anyway, we're looking at Avago Technologies. Before we left, of course, they make radio frequency devices for a lot of the iPhones. This thing, even though it's got a nice gap, huge volume out here, still has not gone up to the previous highs. It's certainly got plenty of volume. The next point we're going to be looking at is $39.45, and so buck and a half higher. I would expect we're going to go into that tomorrow, and if we end up there with light volume, maybe this is going to be the pattern we've been showing, where we've had a light volume breaks of the top and back into the trading range that has existed for a while in a lot of these major stocks. We were talking about basically perfect manipulation in the marketplace. And if you want to look at it TSLA, we've been talking about Tesla coming out and putting out a secondary. I think someone called in on the Tom O'Brien show late Friday. I said one of the things you had to worry about was Morgan Stanley pushing a secondary out in this marketplace. And this is what you get. And I probably saw the height of pushing a stock and trying to get the stock out as quickly as possible in a short market and making it and putting it on the back of short holders in Tesla before this thing broke off on the 9th of April, yeah. This thing had a 45% short interest, or 47%, depending on which source you believe. I think that's probably down to about 15% now, but I think we still get intraday shorts in this thing. When I look at the action on it, a lot of times they'll pop this thing first thing in the morning and then let it go down most of the day, and then you get some kind of late day rally in this thing as shorts are getting out of it. Again, a pattern that really prevailed in the .com phase, that is, shorting early only to get pushed out late in the day. This one's kind of making a nice little formation at a top, but the thing that makes me think that they've gone to this one's gone where no other stock and pushing stock has gone before is trying to link the Tesla CEO with a starlet. A starlet or a star? I don't know. She used to be a star. I think she's more of a starlet now in Hollywood. And the girl that was in Something About Mary, don't remember her name right now, come to me. She's supposed to be, I guess, Hispanic or something, but doesn't look like it to me. But she's been in a bunch of movies. But now they were actually pushing that around today, along with he's been at All Things D, the digital conference this week. But the other thing that I thought was so interesting is they're actually going out there and almost doing a TMZ with this guy of trying to put her together and making her a boyfriend and all that. We'll talk a little bit when we do come back about what he's actually doing that will physically change the landscape of Tesla and whether it will or not. Anyway, we'll be back in a minute. Give me a call, 877-927-6648.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, going to look at a few others popping up here. We were talking a little bit. I thought about it. It was Cameron Diaz is the starlet they're trying to link her to in a TMZ kind of thing and make him the sexiest CEO of the world. And I wouldn't mind if there was any chance in the world that this company could live up to its existing stock price over the last few days. But I have a feeling that this thing, like the Japanese stock market, is going to come back crashing to reality fairly soon. But not before they get all these secondary shares out. And, of course, Morgan Stanley gets to pump out their shares that they got at a significant discount to the market and ring that register just a few more times and head off to the Hamptons to spend their ungodly millions for doing so. But we have, I guess the thing on Tesla is they've been just a nonstop PR marketing onslaught. Of course, the one today is that they'll be building a few more charging stations. And what can you Is it going to make a real difference to make a few more in New York and L.A.? Not. He's come up with a bunch of pie-in-the-sky things at this D11. Again, not a big deal. But what can you say? Anyway, taking phone calls, give me a ring, 877-927-6648. That's 877-927-6648. If you would like to, you can always email me at path@tfnn.com. I'd love to answer your question. If you can't get on the air, you can certainly email me and be glad to take your email. And we'll try to get it in the last segment if possible. So we're watching this market kind of flop around here at the highs and see if any volume's really starting to pick up. What do we got? Going into 4.5 billion shares and awful close to the high out here. So we will take a look at it. But what else did I want to look at? We looked at Avago. Clearwater, of course, Dish Network, and some of the others are all fighting over it. Probably not a big deal. NVE, I think Tom called that or talked about it on his show last night. Looks like Buffett is buying another company. I think I saw 6.9 billion shares. Of course, that thing, Buffett, if he's not one thing, he is extremely good at keeping a deal quiet. Not much leaks out there. And, of course, the last person that got on the gravy train in front of him is now on the unemployment line and was going to be the guy to take over in his place in a blessing. That guy might have been given an opportunity because, of course, he's out of there and can go find another job because I don't think Buffett's going anywhere anytime soon. So you can be the second banana fairly long. Other stocks on the move out here, we've got BIG, Big Lots, down fairly strong today. What do we have on that? EPS was in line, revenues in line, guided below consensus, revenues below consensus, and guided for a fiscal year slightly above, but target is lowered to $35 at most of the analysts out here. So we are right at that number already. Got to a low of $34.11 today. So, this... you probably have a support back in this thing in around the 32 to 33, so probably going to flop around here and come back just a little bit more, but pretty much everything was out there. In world markets, the FTSE was up 0.5%, the DAX was up 0.8%, France was up 0.6%, Spain was off 0.1%, Portugal was off 0.7%, and Italy MIB index was up 0.7. Irish were up 0.2%, and Greece off 1.4%. So kind of a mixed bag over in Europe, but you see the strength in, as it will be and always will be in Germany. See what else we had. To see if there's anything else I wanted to see in this list. Don't see a lot in here. Let's go look at the NASDAQ quickly. Oh, we've got a phone call from Victor in New Jersey. How you doing today, Victor?
Good. First, check out MUJ. It's a dividend-paying stock, like tax-free with bonds or something. It looks like it has higher highs and lower lows if you look at a 10-year chart.
Yeah.
It pays a
7% boy. Too much volume down here at the bottom at the moment.
Yeah, there's volume.
So you wanted to go long, right?
Well, I want to know when's a good time to scoop it up. I got to wait.
Well, I think at the best case, the answer is yes. Why the volume is less than that 1506 out here. It has gone below it, and it looks like it's going to close below it again today, which makes me think at a minimum you're probably going to take a run back here to the $14.76 low from March 19th last year. So what is that, another 20 cents or so? What's that?
Like, if you put it like a 10-year chart, you have two higher highs and two lower lows. So what do you normally do? You have a 3 drive to a top and 3 drive to a bottom. Like, what are we doing? You know what I mean? If you look at the
I suspect you're coming back to the 1476, and we're going to know what the volume looks like in that. And then you got 1470 or 1457. So you got two. I'm looking at this thing, wanting to go back here and test that range before we go much farther on here. Volume's very light in that, so you should see some fairly decent support. But you're going to need the kind of the market going with you. This is the the BlackRock Muni Holdings of New Jersey Quality Fund. So I don't know a whole lot about it, but you're pretty close to support.
Gangster fund. Remember, New Jersey's full of gangsters.
Say what?
New Jersey's full of all gangsters, corruption.
Yeah.
I mean, you got to pay off a lot of guys to do business in Jersey.
Yeah, I guess this is BlackRock, so I'm gonna figure that they've already paid everybody off that needs to be by the time it gets to their fund. But
how did Goldman Sachs get up to $160?
What's that?
How did Goldman Sachs get up to $160? Goldman Sachs.
Making a lot of money on M&A right now.
Really?
A lot of money on M&A, making a lot of money chasing people out the wrong side of the markets, like Paulson. Of course. So I don't think that they're not Mother Teresa out there, but I'm probably not going to find the depths of perversion in a quality bond fund like MUJ. But yeah.
And what about, why did Facebook gap up today? Do you buy it now, or that they're just throwing it out there, pumping it out, and the volume's really high there? Is that short coming
on MUJ?
No, on Facebook.
Oh, well, let's take a look at that.
It gapped up like $1, and now you got like 69.
Yeah. That was on but now I think this thing, you got into the lows yesterday. You had higher volume, so you need to at least go back and test that 23.26 from yesterday before you get back into this thing. The other thing, what?
That's a Fibonacci retracement from the low of like 1773 to the high of 32. I think that's a 50% retracement.
Yeah. Are you there? I think we lost him here. Okay. You certainly do have kind of a small confluence zone right about 2679. I just don't see a lot in this that would make me get excited about going long until it probably got back down to that 18 or 19 buck level, and I think it could even go lower than that. So what I dislike in this last little move down is, so far anyway, is the energy was pretty much like the last leg from January 28th down to the March 27th low, what can you say? I just didn't see enough energy come out in this last leg down to make me think it's over. At best, this thing's going to consolidate out before it starts moving higher. At worst, coming back to that $19 level. And just the news continues to be a drumbeat beat of lower prices on Facebook, so I don't see a lot out of that. So anyway, let's go back to some of the other stocks. I wanted to look at some of the NASDAQ stocks that we're moving out here. And, of course, we've got the standard super high short interest stocks like Sears Holdings off almost a 3%, Marvel, GMRC's down 1%. I wanted to see what we had moving up out here, if there was any strength. Vertex Pharmaceuticals, VRTX is up 6%. AMAT's up 3.5%. MCP's up 3%. BlackBerry is up 2.5%, but that's not much out here. Let's take a look at this. I know we continue to see one of the gentlemen from CNBC that likes to push a lot of these stocks. And what you're really looking at in this is just that. This thing's in a big asymmetrical triangle. We've talked about these before. And until these things significantly bust out of that triangle, it's probably not going to matter much. Let me see if I can, let me go back here and just whip this up really quick so everybody can see. Can't we? Is this thing zoom? View zoom 200%. There we go. And let's just draw a nice little thing. But you've got kind of a nice asymmetrical triangle pattern rolling here, and this thing is not busted out of it. When it does, I suspect the first breakout of these trend lines with lower highs and lower lows to probably be to the upside. It'll probably shake a lot of shorts out. Then it'll come right back down the other side. There's very little, especially when you look at the news today, about Samsung coming on with their slightly smaller phablet, which is I think a 4.5 inch compared to their 5.5 inch version. But just not a lot of reason, I suspect, to get into this, no matter how much the slightly hair and follicle challenged gentleman likes to scream about this going higher. I brought this up several times. If there's one thing clear, it is that Research in Motion doesn't have a lot to offer, and it will probably in 2 years be bankrupt. In the meantime, the street is in the mode of pushing these shares off while it can, and just be very careful in this thing if you're going to be in it overnight, because I suspect one day we're going to get the news and it will be rather horrible. And this thing will take its last, kind of like the Titanic when it broke in half. The front part will start sinking, and then we'll see the whole thing sink, and that'll probably be it. Other things moving out here, Yahoo. I wanted to look at SanDisk, SNDK. Just look at it real quickly. This thing has been pushing fairly strongly. Wanted to see whether or not we had the kind of volume that we were looking up here about breaking, and we have not. This thing has been pretty much on a tear, as some of the memory companies, just for the same reason that MU is on a tear, and that is just a couple of memory companies went out of business and margins have gotten better. The question is whether or not we're going to see anything. We had on the 17th of May 3.7 million shares. We were getting into that today with 3 million shares. So maybe we'd be lucky enough to get into that same price point. But we are breaking above the April 12th high with 5.4 million shares, and we're really just not getting any kind of follow-through. So look for this to close back below 58.92 as a signal that maybe SanDisk and maybe even stocks like MU are in, and maybe the top is in for those for a while. Micron, of course, has had this nice move out of here, and I was hoping that we would come back just a little bit farther so I could get a chance at it. No luck. It took off without me, kind of like a bus if you don't get on. And but this thing has been a straight shot up. It's not confirming, other than extremely light volume up here, where it came within a penny of $12 today. But tomorrow, these are the stocks: SanDisk, MU, some of the gold stocks, and some of the housing stocks are probably going to be the most interesting. In fact, let's go back and look at some of these housing stocks. And I wanted to see how they are reacting today to the market pop. Armstrong still in the trading range. We talked about the D.R. Horton yesterday. Came down on fairly strong volume. This thing's still hanging out in the gap that was formed on the 26th of April out here. Going to have to watch this fairly good. Might have a $3 play, $3.50 play to the upside in this if we do get a huge move. I don't know if it's worth it or not. We'll be back in a minute.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Question from the email, and who was that from? RJ. And RJ wanted to know about NUGT, which is the Daily Gold Miners Bull 3X shares. And what my thoughts were. On the chart, one of the things you have to instantly dislike, and I'll zoom in a little bit higher. If you're not in the den, you can always see these charts in the Tiger TV, channel 14 for all of my stuff. But you had a slightly higher volume low than the April 17th low that came in at $9.61, 17 million shares. You had 18 million shares on the 20th, and you'd really like to see this tested one more time. Certainly the volume didn't decrease enough to make me think that everybody is washed out. Two, I didn't hear enough wailing and gnashing of teeth, and still people are talking about buying it. Almost a great sign of when to buy gold is when no one asks me anymore. When I continue to hear Tom getting phone calls about buying gold and others, it generally tells me we're probably still just a little bit early. More than anything else, commodities have very narrow entrance and exits. I've talked about this and watching just the water go in and out of the bay here in Clearwater. You got a nice little bridge there, a lot of water. The tide comes in, the tide comes out. But, of course, it's got to go through that little narrow outlet, and you can really see the water move in there. And unfortunately, it shoots out fairly far because, of course, the speed really picks up on that narrow inlet and exit as the tide comes in and out. And I would say that if there were a few things that truly overshot how far you thought that they could go up and how far you think that they could go down, is gold. And I just haven't seen a lot in here that tells me that it's over. I think that that I would love to see the dollar index about $88. And just basically everybody throw their cards in. I love to see some of these giant holders of the GLD get washed out. And I think, we could see a price that would surprise all people. I think we could easily get back in the 1250 range and even maybe for a day see a 100, 150, 200-point move in the price of gold and just slaughter everybody. And probably and normally my biggest wins have been when it has been the absolute hardest to think about going long. And gold every time that I've bought it, and everybody has told me gold is over, gold's going down another 200 points. When everybody has abandoned all hope, probably a good time to buy it. I just don't see that yet. I certainly would love to see that $8 range, and that would be your first test, but you need that low $8 range, $8.13, tested on lighter volume, at least in this and some others. But I guess that old saying, waiting for the whites of their eyes, is exactly what you want to do. I just know that if I was in a war it was 1776, and the British were coming, the hardest thing to do would be to wait and wait and wait till you knew you had a great shot. And unfortunately, people are shooting at you, and you see markets moving. I know the psychology is very, very tough to go back and chase these right back up the other side. It's just never been a way for me to make a lot of money. Sometimes I've made some short money in selling these and buying them, but it's always been, the big money has always been waiting and sitting on my hands until everybody hates it. And I still don't see everybody hating gold quite yet. So just give it a little time, in my opinion. Anyway, we will see you tomorrow, same bat channel, same bat time.